Welcome back, everybody, to the Peer-to-Peer Policy Pod. I am Brian Morgenstern here with the great Sam Lyman on the 1-year anniversary of starting this podcast. My, how time flies when you're having fun. We have been talking a lot about the Bitcoin Strategic Reserve. There was a Bitcoin for America event, a White House crypto summit. We are hitting the mainstream, people. Big news to discuss. So, Sam, which piece of it should we start with?
Let's start with the market jitters, because as much cause for celebration that we had this week and last with Bitcoin being rolled into a Bitcoin strategic reserve, Senator Lummis introducing a new Bitcoin Act, there's a lot of fear in the markets right now, and for a lot of reasons. And it's not just the crypto market. So let's talk first about the stock market. This last week, there was absolute carnage out there. We don't usually show graphic images on this podcast, but let's show this first graphic image of blood in the streets with the S&P 500. So the S&P 500 earlier this week had its worst day since 2022. In addition to that, the NASDAQ jumped off a cliff, falling 4%, and Tesla stock declined 15% in one day alone. So naturally, this is having a huge impact on the markets itself. We recognize that a lot of this jittery action is because of tariffs, because of Doge, because of the cuts to government. But there's a lot going on here, and it doesn't necessarily feel like the golden age right now in the stock market, though these things take time. It's also not the end of the world like some people say. But Brian, can you help us unpack exactly what's going on here with the economy?
And the first thing I would say is that we're not even close to correction territory. The market's still, I think, higher than it was 6 months ago. So I think the screeching and rending of clothes is a bit overwrought. That's the first thing I would say. The next thing I would point out is pay particular attention to the Treasury Secretary's discussion of this, which I think has been very, apt, very smart, because what they are doing is moving productivity from government to the private sector, which is going to be pro-growth. So much of the job creation in the Biden administration, I've heard different estimates, 25%, many months it was far more than that, of the growth was coming from government spending, either directly or indirectly. With government spending, there's no profit motive, so it's not really pro-growth. The proverbial, government hires a ditch digger to dig the ditch, and then they hire somebody to fill it back in. Well, that's not really creating a strong foundation for a pro-growth economy where you're going to have 3% GDP growth or 5% GDP growth as we've had in the past. And so we've been kind of middling at this like 1% to 2% growth rate, and we've been told it's the new normal. It doesn't have to be. There's 8 million or something private sector jobs open. That dwarfs the number of government workers that are getting laid off. If we can move people from less productive positions to more productive positions, you're going to have higher GDP per capita, which is really, I believe, how you can start to judge improvements in our quality of life. That doesn't happen overnight. It requires some turbulence. As President Trump has called it, a little disturbance. It's true. We have to live through some short-term pain for some long-term gain. The third point I would make is that we lived through this movie before. It was in the first Trump administration when he was trying to rebalance our trading relationships. I remember being in the Treasury Department working on, messaging to explain what was happening and kind of calm people's nerves, because we saw these wild swings. I mean, we saw the market drop 1,000 points in a single day. But later on in the Trump administration, after some of the issues had been resolved, the market started to soar again. And it really was getting back to that pro-growth foundation. So I guess just to recap, it's not down that much. It's not even like in a correction. It is the short-term pain for long-term gain. And we already know how this works out. So the smart money is going to buy the dip, and they're going to be fine in 6 months or a year or whatever short-term interval it takes to kind of fix where we've gotten, the point where we've gotten that the bloat is actually slowing the growth of GDP per capita. That has to be corrected. That's what they're trying to do. And so I would just encourage people to give them a little bit of grace, a little bit of time. Things are going to be better on the other end.
That makes so much sense. Like you said, our economy has been supported by government subsidies to the tune of hundreds of billions of dollars over the past few years. And so naturally, things are going to course correct in a way that is a little painful at the beginning, but also necessary. I'm curious, Brian, what you think about this take that I saw from Daniel Tenero. He actually works for Peter Thiel, one of his investment firms, if I'm not mistaken. Dylan, can you pull that up? So this is fascinating. He says going hard out the gate with a rhetorical trade war while committing to nothing concrete lets you calibrate policy to hit risk assets just hard enough to bring down bond yields and maybe get the Fed to cut in the next meeting or two, granting you the fiscal space to get Tax Cuts and Jobs Act extended and bringing stocks right back up. So I think that's a fascinating theory right there. He said that a few weeks ago and actually theorized this over the summer. And I think that could be very well what's going on here. This is an attempt to get a yield down, which has been a top priority for Secretary Bessent. At the same time, this gives them the space that they might need to push for the Tax Cut and Jobs Act to be renewed just later down the road. Brian, I'm curious what you think of that take. Obviously, the president can't telegraph exactly what he's doing, but do you think that is exactly what he's doing with this particular strategy?
I do think that's a pretty good take, because getting the interest rates down has been a priority, and they need to come down for a number of reasons. One is that interest rates have really been harmful to the middle class, people purchasing homes and cars, been particularly harmful for the federal government, and they're about to refinance trillions of dollars of federal debt. If we're going to prevent this debt spiral that we are careening towards from actually happening, we have to have cheaper debt options for the US government. So, and that will help in turn with inflation. And then rates come down, you extend Tax Cuts and Jobs Act, so you have more liquidity in the private sector. That's going to goose markets. So, I think that's about right. If you bring rates down, interest rates and tax rates down, the market will react positively to that. But it also doesn't like uncertainty in the short term, so you're seeing it take a dip. So this kind of, I don't know, almost like, I guess I'd describe it as like a self-fulfilling prophecy or something that he's articulating there, I think is pretty good, and maybe about right. Seems to be playing out in real time in accordance with his prediction. So we'll see what happens in the months to come, but I think he's onto something.
Yeah, it sounds like it. Let's dig in a little deeper on the tariffs angle too, because tariffs are really what's causing a lot of this market uncertainty. However, it might be just the necessary corrective that we need to fix things with the stock market. As Jay Powell himself said recently, our national debt is on an unsustainable path. Can you play that clip, Dylan?
Federal budget is on an unsustainable path. The debt is not as an unsustainable level, but the path is unsustainable. And we know that we have to change that. We've got to get back so that revenues and spending are in better alignment. We don't need to pay the debt down. We don't need to balance the budget. We just need the economy to grow faster than the debt, and that's not happening.
Right. So we need the economy to grow faster than the debt, and that's clearly not happening. So one of the tools that Trump is using to fix the economy, to correct trade imbalances that exist currently, are these tariffs. And if you could pull up the next screenshot, Dylan, this talks about two potential ways that Trump is using tariffs to better the economy and put it in an America First direction. So he's using them, of course, as a form of leverage. We've seen that very clearly. And he seems to be pretty serious about using it as a form of revenue as well. Of course, that take we just read described what Trump is doing as a rhetorical trade war. Do you think it's rhetorical, or do you think he really is as committed to tariffs as he seems to be when he appears in front of the media?
Yes and yes. So he is very committed to them. He frequently cites history and President McKinley. And look, there are many countries around the world, and there are a lot of very smart economists, tax attorneys, and others who would probably your best pro-growth tax regime is more of a consumption tax regime than an income tax regime, because you want to have a stronger supply side that ultimately leads to lower costs and more savings, rather than currently our economy is structured as a consumer economy. It's all about, it's like 70% driven by consumer spending. So if you shift things from an income taxation regime to a consumption taxation regime, there are many who believe that that is going to have a stronger foundation for the future. And so I do think he's committed to tariffs in that way. He's also committed to them for leverage, because we do need to rebalance trading relationships. I mean, in the aftermath of World War II, we've been completely out of balance for some period of time. Made sense. We had to rebuild Europe, giving other countries access to our markets while putting up with trade barriers for our own countries made some sense to get the world back on its feet. It doesn't really make sense anymore because the world is much more competitive and there are a lot of very strong industrial countries. So if you really do want to build up America's ability to self-sustain, to manufacture on our shores, to have medications and medical supplies, factories, all these things that have been moving abroad. If you want to have a strong country, you really have to be able to self-sustain and make things. And so I think he is committed to them rhetorically to get leverage to rebalance trading relationships. I also think he is committed to trying to shift us more from an income taxation regime to a consumption taxation regime, because it does bring costs down and encourage savings, rather than this consumer economy that we have that is just push money out the door, flood the zone with liquidity constantly. At some point that leads to, a death spiral. And, Jay Powell said we're not at an unsustainable level. 125% of GDPs are debt. I mean, it's arguably unsustainable, but the path we're on with $2 trillion deficits is definitely unsustainable. So to get growth back to be faster than the growth of our debt, if interest rates are 4 point something and change, to be on a sustainable path, you need growth to be higher than that. So they're taking a two-pronged approach: drive down interest rates so that we have a lower bar to clear, and then drive up growth to make sure we can, in fact, clear that bar. It makes all the sense in the world, but changing the status quo always stresses people out. So I don't know. That's the way I think about it.
Yeah, I think negotiating also stresses people out, and Trump is the master negotiator. He wrote the book that cemented his fame. It was called Art of the Deal. And I think a lot of times when people see Trump putting forward some of his proposals, they don't recognize that it's all part of a negotiation process. Brian, you worked with him for a while in the last administration. I'm curious, how does knowing the art of the deal help explain Trump's policymaking and his approach to the economy, for example?
Yeah, so he doesn't want to color around the edges. He wants to make profound changes. And he talks about this a little differently than your typical person, as we know. But in order to make changes that he believes are going to build a much stronger foundation for our economy, you can't play nice. You have to really be assertive. And I will say, having worked in his administration for 4 years, he does govern by chaos. It is strategically. It's strategic chaos, I think, I'm going to trademark that, because when you have uncertainty, if your opponent has uncertainty, they don't know what you're going to do. They're trying to like game theory and figure things out. He's already a few steps ahead because he realizes that access to our markets is the most valuable item that is on the chessboard. And so he believes that everybody he's negotiating with will blink at some point, because if they don't have enough access to American markets, their economies will tank. And so he does believe he's got the leverage, and unpredictability adds to negotiations an element for your opponent of increased urgency to get that certainty, to get a clear path forward, because then the anxiety amongst your kind of voting base builds up and puts pressure on the politicians to, hey, give me certainty, give me the path forward. So he governs by strategic chaos to keep his opponents on their back foot so that they will be more willing to come and make concessions so that they can get a clear path forward, if that makes sense. And it's all part of the strategy. It can, like I said, lead to a lot of short-term anxiety, but generally pretty, better deals on the other end. And that's what we saw. That's how we saw markets respond in his first term. So we've seen this movie before. His negotiating strategies seem to work pretty well. He's made himself billions and billions of dollars, and he created, I think, arguably the strongest economy the U.S. has ever had. And that was because he was building up working class, middle class wealth and tamping down this yawning disparity between the haves and the have-nots. That's really important for a stable society. If you have inflation, asset prices increase. That means the people who already own stuff get richer, and the cost of goods goes up, so that if you are living paycheck to paycheck, you get poorer because your paycheck doesn't go as far. And then, as we've said many times on this podcast, that's how you get your French Revolution and society collapses. So you really do need to be building up at the working class level if you want to have a happy and healthy American people. So anyway, that's a long rant, but that's how I think about it.
And it makes sense. It's worked out very well so far, just 2 months into his presidency. I think a perfect example of that is Ukraine and the conflict in Ukraine and the lack of funding from European countries to finance the Ukrainian people in their efforts against Russia. I know that when Trump mentioned that we would pull out our funding of Ukraine, afterwards, just a week later, Germany announced that they would devote over $500 billion towards building up their own defense. And people on Blue Sky, I saw screenshots from Blue Sky, they thought it was a Trump own. They said, look what happened now. In Trump's absence, the European nations are stepping up and financing their own military. And I thought that's exactly what he intended to do this whole time.
Point.
The entire point. And so it worked. It might be a stressful process for people to watch, but it seems to work just about every time. And I'm confident that it's going to work again with our economic situation and with Secretary Bessent at the helm of Treasury. I mean, this is one of the most brilliant macroeconomic minds in the world. I also understand that he was one of the best bondholders in America. And so this is someone who knows their stuff. President Trump clearly knows what he's doing as well, as evidenced in his first administration when, like you said, the economy was stronger than it had been in decades. And so I'm confident that we'll find our way through. And like you said, he's very committed to making profound changes and to using unconventional methods to do that. One of those unconventional methods is establishing a strategic Bitcoin reserve. So just a year ago, to lay the groundwork for people, a strategic Bitcoin reserve was a pipe dream. It was something that was an idea that sprung up in the Bitcoin community, but a lot of people said it was a long shot or that it was a Hail Mary, it would never work. However, it worked. We now have a strategic Bitcoin reserve. This is something that goes back many months. First, President Trump announced it at Bitcoin Nashville last year. Now we have an official executive order where the White House has established the Strategic Bitcoin Reserve and United States Digital Asset Stockpile. There you have David Sachs and Bo Hines, who are heading up the crypto and AI efforts in the White House. And so this particular EO, I was blown away by. It was the subject of our discussion during last week's pod. And honestly, it exceeded all my expectations. Brian, I'm curious what your reaction to it was last Thursday night when the details of this executive order came through the wire.
I mean, I thought it was brilliant, elegantly done, as it was described to me by a very smart friend of mine. And I think that's right. It recognizes that, number one, the U.S. owns a lot of Bitcoin. Number two, there has never actually been a proper accounting, and nobody's gone out and figured out how much Bitcoin the government holds. So it's going to find out. It set Bitcoin apart as a strategic reserve asset where the government can find budget neutral ways to acquire more Bitcoin. In other words, have the government acquire assets that will appreciate. And it sets aside a digital asset stockpile separately, but the government is not going to go out and acquire more speculative tokens at this time. I think that was exactly the right outcome. I think people viewed, if the government was going to just go out and spend tax dollars to buy Bitcoin, it's like a leveraged investment, and people were a lot less comfortable with that. We have to start paying down the debt at some point. Totally get it. But shifting the government into, create assets that will appreciate rather than just constantly shoveling money out the door will be good, very good for taxpayers. And it's part of this broader strategy to have the government start earning more revenue from its productive assets like real estate, oil and gas leasing, you name it. There are a lot of ways. The sovereign wealth fund idea, some of the most, beautiful societies and beautiful cities in the world are really kind of powered by sovereign wealth funds. So the fact that the United States doesn't have one, I think kind of has been a missed opportunity for many years. So I think it's a great strategy. I think it landed exactly in the right place. And now it'll be the very hard road of execution, finding all the Bitcoin, figuring out what, is still part of a legal proceeding, might have to be given back, keeping what we can, and then acquiring more. It is, I think it landed in exactly the right place. And I think the next discussion to help build the Bitcoin reserve is going to be the bit bonds topic that is now becoming very timely and a hot topic of conversation, as we know. That can also help on our last discussion of lowering borrowing costs and putting the U.S. on a much stronger trajectory with rates and with refinancing our debt, getting that down. So we'll see. I wasn't sure where they were going to come out after the president's tweet over the weekend before, where he was going to include some other coins in there. It was going to be kind of a grab bag. I think people reacted correctly that no, Bitcoin is the one that's scarce and decentralized. That's the strategic asset. There's only 21 million Bitcoin. The country that moves first is going to have a first mover advantage and much higher appreciation. It becomes a self-fulfilling prophecy. Other countries will follow suit if the U.S. does it, sort of guaranteeing that there will be more demand than supply, and then proving the efficacy of this strategy. So really brilliantly done. They walked a very fine line expertly, and I was very glad to see that outcome.
I was too. Yeah, that tweet though, talking about strategic chaos, it made me lose sleep at night. I remember the next morning, I woke up early just worrying that it would be a Bitcoin plus Dogecoin strategic reserve. And I thought, oh no, this could be real trouble. But no, the White House clearly represents a very common meme in our industry, which is Bitcoin, not crypto. They made very clear in their strategic reserve announcement that Bitcoin is separate and apart from the other cryptocurrencies. Other cryptocurrencies we will hold as a stockpile, but we won't acquire more of them. But it made very clear that we are to stack sats as a federal government. Can you pull up that tweet, Dylan? This is the key line I want to zero in on. This is from the executive order. The Secretaries of Treasury and Commerce are authorized to develop budget-neutral strategies for acquiring additional Bitcoin, provided that those strategies have no incremental costs on American taxpayers. So there's a lot of really interesting ways that we could stack sats in a budget-neutral way. One of those you teased just now, Ryan, which is bit bonds. We're going to talk a lot more about bit bonds next week. Really exciting idea that really present a win-win where the government can bring down yields and thus save money, and taxpayers or bond purchasers, they can get what is essentially risk-free exposure to Bitcoin. So a lot more on that in next week's episode. But in addition, you have other assets that the federal government owns that can simply be swapped for Bitcoin. This could be federal land. It could be maybe a small portion of the gold reserve. It could be those other cryptocurrencies in the National Digital Asset Stockpile that could be swapped for Bitcoin. It could be any number of ways, but I think this perfectly satisfies what the Bitcoin community has been pushing for, recognizing that it's what's best for the country. And it also satisfies critics of the executive order who had knives out for David Sachs in the lead up to this announcement, saying that David Sachs was filling his own pockets, when we've now discovered that David Sachs is actually probably going to lose billions of dollars over the next year by deliberately divesting all of his crypto investments in the lead up to this announcement. And so this is a great outcome for our industry. There's more to come. And I just think we are in a completely new day when it comes to Bitcoin in the White House. And so my last question I had for you on this particular subject, Brian, is let's zoom out a little bit. Obviously, creating a strategic Bitcoin reserve is great for the country, but why is this good for Bitcoin? What does it do for the legitimization of Bitcoin as an asset class?
Well, I hate to say this, but it's kind of true. When you put sort of an approval stamp on an asset, it opens more people's eyes to it. So it gives it this air of legitimacy. But to be clear, as we said last week, and our friend David Zell has said, Bitcoin doesn't need the United States. The United States needs Bitcoin because it the new digital gold, but better than gold, has, I think, arguably more utility. It can be transported anywhere in, at the speed of light. It's truly scarce, whereas we could find more gold in a mountain, or there could be a gold asteroid, as our friend Pierre has said. It is the scarcest, most decentralized, hardest money ever created. And so someone is going to do this. El Salvador already has a digital Fort Knox for Bitcoin, and their economy has done very well with that sort of backing. So we've seen it happen on a smaller scale. the first large mover is going to have an outsized benefit to do this. And so it should be the United States. We should be the leader. This does, I think, open up more people's minds to the idea that you should strategically reserve Bitcoin for your home, for your family, for your state, for your country. I think the amount of research and work that has to go into a clearance process to get a document like this done in the federal government, a lot of people don't understand. It is arduous, and everybody weighs in, and you get a 1,000 different opinions. So the only thing that survives is the thing that has withstood scrutiny. So I would actually kind of liken the clearance process for a document like this to the security of the Bitcoin network. Only the things that are true actually make it through, that have withstood all the scrutiny. So I think it gives it a deserved stamp of legitimacy, even though I tend to kind of hate that term, that I think will, fire the starting gun for this space race for strategic Bitcoin reserves all around the world. And that will just strengthen people's faith in it, people's willingness to invest in it. And then Toshi's prophecy comes true. You might want to have some just in case it catches on. Well, it's caught on. That's what this shows. It's caught on. Historic event, in my opinion.
Absolutely historic. It's hard to imagine the United States ever banning Bitcoin when it's actively stacking Bitcoin. I think that's one of the biggest takeaways. And there's some other interesting ripple effects from this announcement. Let's take a look at some of these ideas here. So because of this Bitcoin strategic reserve, if you could pull up that tweet, Dylan, here are some of the other consequences of it. It means most likely other countries will buy Bitcoin. Wealth managers now no longer have any excuse to say, oh, it's too risky of an asset. You don't want this in portfolio. It's magic internet money. Well, clearly the federal government doesn't think so. So why would wealth managers? Financial institutions don't have any excuse, neither do pensions or endowments at this point. Fear of the U.S. selling is gone. It's very clear in this executive order that the U.S. will not sell its Bitcoin. In fact, it will likely buy more. And then you have the likelihood of states buying just went up. So we know that Texas is poised to pass their own strategic Bitcoin reserve, which is absolutely huge because it's such an enormous economy in its own right. And then, of course, you have the probability that the government outlaws Bitcoin is definitively zero. So this announcement has so many positive consequences that extend beyond simply just establishing a strategic Bitcoin reserve. And it's a profound vibe shift from the last administration, so much so that you have the White House publishing crypto hype videos. Let's take just a quick video of the crypto summit. Let's take a quick look at that before we move on to our next subject.
Welcome to the first ever White House Digital Asset Summit. Last year, I promised to make America the Bitcoin superpower of the world, and we're taking historic action to deliver on that promise.
Your administration is moving at tech speed.
We are going to keep the U.S. the dominant reserve currency in the world, and we will use stable coins to do that.
Technology is at the foundation of the Trump presidency.
This is truly a historic day. And as a crypto founder, I couldn't be more proud to be part of your administration.
No one in this room could have envisioned this just a couple years ago. We want to stay at the forefront of everything. This is a big day. Being in the White House is a big deal, and you have great support. Thank you all very much.
So that's clips from the White House Crypto Summit. So much to celebrate right now. In addition to the White House Crypto Summit, we had a huge event on Tuesday, Bitcoin for America, hosted by the Bitcoin Policy Institute, which is the premier Bitcoin policy think tank. So at this particular event, it was a who's who of Bitcoin celebrities. You had GigaChat investor Michael Saylor. You had the crypto queen herself, Senator Cynthia Lummis. You had Vivek Ramaswamy as well, former presidential candidate, now candidate for governor in Ohio, who had a really interesting talk about what he sees for the future of Bitcoin. It focused specifically on Bitcoin's impact in the corporate world. We've talked so much about Bitcoin's impact on government, but let's talk for a second about this idea that Vivek had about Bitcoin setting the hurdle rate for businesses in the United States. I know, Brian, you had some thoughts on this. If you could pull up that tweet, Dylan.
Mm-hmm.
So, Brian, for our listeners who haven't heard of the idea of a hurdle rate before, can you help us unpack what Vivek was saying about Bitcoin and the way it will set the hurdle rate for corporations and what that means for adoption?
Yeah, absolutely. So it's about allocating capital, particularly if your capital is scarce. How are you going to deploy it most effectively? What is its highest and best use? What is going to yield the most value, create the most wealth? And so, for the past many years, people have looked at a number of things, the S&P 500 or the Magnificent Seven, um, and so if they're going to deploy their capital, should they just invest in some of these other assets that are going to grow at a relatively predictable rate, or are they going to try to do something new and different that might grow faster than some of these assets that are sort of on autopilot with their growth rate? And if Bitcoin, which the issue is Bitcoin has been the best performing asset of the last decade. And so if you're a company sitting on $1 billion of capital, should you just buy Bitcoin and let it appreciate? And that'll be the fastest way for your company to grow. I mean, that has been Michael Saylor's strategy. And he brought his company from a $250 million company into a $50 billion company in 48 months. That was part of his speech at this event. The question now shifts for capital allocators. Should I just buy Bitcoin or have a strategic reserve of Bitcoin? And then what is going to grow faster than Bitcoin? Is it going to be to create a new pharmaceutical product? Is it going to be to create a new version of electric car? Or is it going to be to, build a new manufacturing plant? Or is it going to be to buy Bitcoin or have some mix of the two? The question for a capital allocator becomes, can I grow faster than Bitcoin? And if the answer is no, you're going to put that capital into Bitcoin. If the answer is yes, you're going to innovate. It creates more efficiency in the allocation of capital and ensures that we're going to have faster growth in every industry, because it ends up kind of culling away more speculative projects and laser focusing on the projects that have the most promise. So I found it to be a really interesting concept and appropriately academic for a think tank.
Yeah.
But I did find it very interesting. And that tweet that you put up that I was referencing, Dylan, could you throw that back up? So Bitwise created this new ETF, and our employer Riot is part of it. It's the companies that hold the most Bitcoin on their balance sheet. So this is very much consistent with what Vivek said, that if companies are diversifying their capital allocation to hold Bitcoin on their balance sheet, and we believe that there is going to be more demand than supply of Bitcoin, which I think is pretty much baked into the cake at this point, those companies that have Bitcoin as a part of their treasury strategy are going to grow faster than other companies. Now, Bitwise has created this investment product where the top corporate holders of Bitcoin are in an ETF now that people can actually invest in. And it's kind of putting Vivek's concept of that hurdle rate into practice before our eyes, which is interesting because in his speech, he was like, I don't know if it happens in a month or 6 months or a year or 10 years, but like, this makes all the sense in the world. Companies are going to start doing this. And then that same day, that ETF was announced. And I was like, well, happened faster than you thought it would, but it's actually happening. So that's where we are. Really interesting developments and very bullish all around.
Bullish indeed. It's fascinating that that prophecy was fulfilled on the same day. And you can see in the numbers as well. If you could pull up that chart, Dylan, you can see here just how much public corporations have started to adopt Bitcoin as a treasury reserve asset. It's about more than doubled in the last year alone. You have over 1,000 Bitcoin being custodied by companies across the country and across the world. One of them being our own, right? We've started our own Bitcoin treasury. Of course, we've always been accumulating Bitcoin through the mining process, but we've followed the Saylor model and bought Bitcoin on the open market as well. And I think you're going to see more of this happening in the future. So big things happening for Bitcoin in the corporate world. Of course, big things happening for Bitcoin in Congress as well. One of the co-hosts of this Bitcoin for America conference was Senator Cynthia Lummis, who on the same day reintroduced the Bitcoin Act, which of course is the legendary Bitcoin Reserve Bill. And not only did she reintroduce this, she brought on 12 of her colleagues in Congress as co-sponsors to support her in this effort. So this includes some big names, people like Marsha Blackburn, people like Jim Justice, and Nick Begich over on the House side, who announced that he would be sponsoring the House companion to Senator Lummis's bill. So this is exciting news. It's exciting as well that we've got more support in Congress for it. However, notably, there aren't any Democratic co-sponsors for this legislation at this time, which is interesting because at this same conference, we had remarks from Representative Ro Khanna, a very forward-thinking Democrat from California, and he said the following in this tweet. He said there should be a bipartisan consensus that Bitcoin is good for the United States and the world. So he's correct. Bitcoin should be bipartisan. It hasn't been bipartisan for the past couple of years. Of course, there's been courageous Democrats who have supported it, but there have been a lot more Democrats who have gotten in line behind Elizabeth Warren and trying to attack it. But Representative Khanna is he's not afraid to ruffle feathers in his own party at times. And he himself came out last summer and he said that he's open to the idea and he actually likes the idea of a Bitcoin reserve and it makes sense to hold Bitcoin on the balance sheet. So, Brian, I'm curious what you take or what you make of this development with more co-sponsors for the Bitcoin Act, but also what might be done to bring more Democrats on board. What do you think the hesitance there is?
Well, I think they need to hear from their constituents. I think that hesitance is a couple of things. One is you mentioned that the last administration was very hostile to it and they didn't want to buck their party leadership. Another is that perhaps the grassroots, the voters have not quite gotten to them and helped educate them on what Bitcoin is and why it matters so much. But we're getting there. The last election cycle was transformative. And I think, a lot of eyes are open. We've seen some tea leaves, at least. We just saw a Congressional Review Act resolution to roll back an IRS broker rule, not specifically about Bitcoin, but applied more to, it matters for Bitcoiners, but it was more important for like crypto exchanges and stuff. But if you look at that, you look at the SAB 121 vote, which was about banks' ability to hold Bitcoin on behalf of their customers and other digital assets on behalf of their customers. There was a huge bipartisan vote on that. In the last Congress, the FIT21 market structure bill got a lot of Democrat support on that. So you're seeing the cracks in the wall. Congressman Khanna is right. This should be bipartisan. It should not be at all a partisan football. This is about the well-being of the United States and growth going forward and our economic leadership. I particularly like a quote of his where he said, being against Bitcoin is like being against phones or laptops in the 90s. Like, it's a technology. It doesn't care if you're a Republican or a Democrat. You should want the U.S. to win and succeed. So I think he's dead on correct on this. I hope he persuades more of his colleagues. It seems like it's happening slowly but surely. And we can help with the Bitcoin Voter Project to get more Democrats on board. So I think we're heading in the right direction. I'll put it that way. But it is disappointing to see no Democrat co-sponsors yet on there. I think there will be, hopefully, knock on wood, but coming months, I think it'll get more and more support.
Yeah, I'm optimistic that it will catch on eventually in Congress. I think there's a lot of people who might mistakenly think that because of the executive order establishing a strategic Bitcoin reserve, Senator Lummis's legislation might not be necessary. What would you say to those people to help them explain the difference between the legislation and the executive action?
Sure. So a future chief executive could undo an executive action. But if it's in legislation, it codifies it into law. And then to undo it, you'd have to pass a whole new law. It's obviously a much more rigorous process to get legislation through Congress. So I think making it a permanent policy of the United States is very, very important. She also has some funding mechanisms in there that would, I think, answer some heretofore unanswered questions. So it could provide some level of certainty, not just for how you establish it, but for its permanence and its staying power. So legislation is always preferable to executive action, but we're grateful for the executive action. It is a great way to get going. But the legislation would, I think, goes a little bit deeper, creates some stronger roots in this idea. So we'll see what happens.
Yeah, it brings in a lot more bipartisan buy-in for sure. Well, that about rounds up our Bitcoin and economic news for the day. We always, of course, end with our grab bag section. I'll just do a quick shout out to our podcast for my grab bag. If you could pull up this screenshot, Dylan. So today is March 13th, 2025. This was a screenshot from our very first episode of the P2P Policy Podcast, which took place on March 13th, 2024. So, Brian, we've been at this for a year now. We've been filming pretty consistently just about every week, except for maybe during the holiday season. And it's been a fun ride. I've learned a lot podcasting. I've learned a lot about the policy space and just interacting with our audience. It's really been a joy. Dylan is the man behind the scenes. He's the Jamie to our Joe Rogan and guests trying to put this show on. And so I feel like Dylan is the unsung hero of this podcast. He makes it happen every week. Thank you, Dylan. Thank you to Rumble for providing this platform for us. It's been an absolute delight doing this podcast with you guys. And happy birthday to the Peer-to-Peer Policy Pod. That's my grab bag for the week.
Excellent. Yes. Thank you, Dylan. Thank you, Abby, for making the connection. Thank you, Rumble, for letting us run our mouths. And it's been a total blast. It has been a lot of fun. I, in keeping with my instincts, am trying to have more funny things in my grab bag. And I thought this video about Elon selling the president a Tesla on the South Lawn was one of the funniest things I've seen in a while. Can't forget, Joe Biden was riding around in a Jeep on the White House lawn trying to promote U.S. automakers. Here, with Elon under attack due to his Doge activities, the president wanted to show support for a great American company, Tesla. So, but somebody, I think, was trying to mock it, but it just made it seem way more awesome. And it's a very funny video. So, Dylan, can you roll that commercial?
Going on now at the White House Tesla Auto Mall. It's the biggest sale of the year.
Very safe. It's very strong, heavy. It's all steel, stainless steel.
Come on down to Pennsylvania Avenue, just off Route 29, to get our best deal ever on a brand new Tesla.
I want to make a good deal here. They have one, which is $5,000, which is pretty low.
Get a Model 1 with a different panel and everything's computer.
This is a different panel than I've had. Everything's computer.
So don't waste your time going to those other Tesla dealerships with riots and flaming cyber trucks. You gotta come down to White House Tesla Auto Mall.
I love Tesla.
You gotta come down to White House Tesla Auto Mall.
This is really amazing.
I love it. And I know they're trying to make fun of him, but they just made him seem cooler and more funny.
Yeah, I think it's an interesting commentary on the state of comedy right now, too, because this reminds me a little bit of the JD Vance baby memes. Have you seen those going around? They were actually originated by, I think, crypto Twitter started the meme.
Oh, really?
And then it just grew from there. And people on the right loved that meme,
Yeah.
but the left didn't understand it. And they covered the meme phenomenon as something that must, an actual quote from an article was, "These must be absolutely devastating for JD Vance." They don't understand. It's like, that's our boy.
Yeah.
It's our guy. We're just like having fun with it.
He's memeing him into like historic pictures, baby pictures, high school photos. Like, I mean, it's just all over the place and it's hilarious. Like, and if I were him, I would think it's really funny.
Right.
And it's very endearing. Yeah. So the misread, I guess, is continuing to happen. I don't know what is up with the journo brain these days, but they just like, they've lost all ability to process humor.
100%.
Man. But yeah, thank you, Daily Show, for making Elon and Trump seem even more hilarious, I guess. Well, thanks for watching, everybody. Hopefully you've learned some, you've laughed some. Reach out to us. Follow us on X at MorganSternNJ, at Sam Lyman 33. And we will see you next time on the Peer-to-Peer Policy Pod.